Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? We're going with a slightly watered down version here today as we're having technical difficulties, but it's not audio technical difficulties. So, take that. We're on a streak here with the audio stuff. Anyways, we're financial advisors here at Jazz Wealth. You can see everything behind me. That's what we use for education here. We don't really do the office space thing. We have TV sets all around the building here, and so we like to teach, right? The more I can teach you, the better. And we're about to be one of the only advisors that I know of that could actually advise on all of your dough, right? Be able to see every little thing. So if you want help with your business valuation relative to the insurance that you carry compared to the income you bring in from the business, we'd be able to advise on all of that, the strategies, the geekiness and stuff as well. So super excited about that. A little summertime break, but it is time to get back to work. The market didn't feel like it was time to get back to work here today. By the way, can I just ask you to hit the subscribe button? We're trying to grow the channel, you know, and I know a lot of you watch, 55% of you are not subscribers. You could turn notifications off or anything, but we're trying to get the number up, you know, make us look like somebody. Hit subscribe for us. Anyways, like I said, the market was on summer break as well. We know that this is a slow time of the year, right? Very normal. You saw today, there's not a lot of data out there. There's not a lot of economic numbers. There's not a lot that we can say, yes, that's a buying opportunity, or, ooh, run away, right? We do have that coming up. We have the Fed speaking. Well, really, Jerome Powell will be talking Friday, right? So they start Thursday, but, you know, they got the whole Jackson Hole thing going on. And so there's really nothing else to go on. Some light earnings news, things like that, you know, not a big deal there. But remember, the Fed's current stance, as of the last time we heard from them, was that inflation is nowhere near our objective. So there's a little bit of a cap put on the recent rally in the market because we want to know, are you going to keep being aggressive with your rate hikes? If so, obviously we know what that does to the stock market and specific stocks in general. But we don't find out till Friday. So look at the stock market today and ask yourself, do I need to do something, right? That's the key right there. I'll go over here. You can still see the charts nice and everything. Do you need to do something with your day trading, your long-term investments? Maybe you're a scalper. Maybe you like to buy and sell, you know, just on volatility. Whatever it is that you do is fine, but is there a reason to do something? Almost, I would argue, right? We've got a nice pullback in the works here, so we're working on it. But it's maybe a time to look like we did yesterday. We looked at the sectors that are closest to hitting new highs. In other words, finding relative strength. We looked at relative weakness, right? So if you want to see yesterday's video, you get a feel for, I should be looking and building a shopping list, maybe looking to rebalance things that you've set up or whatever you're doing. But it's not time to press the button, right? It's coming. You'll have your Friday action, but look at the market here. We're working on a pullback. The best case scenario from right here would be chop to take us through the rest of the week, right? Chop. That would be ideal. That tells you that this rally, looking at the previous low, is sustainable and people don't believe we're going to come down there and challenge it. It tells you that people were only willing, these people here, were willing to sell short-term profits that they had maybe from buying somewhere along the way. It tells you that everybody that was scared over here has realized that this rally is good enough. They are less scared and they're willing to sell out of their positions for a smaller loss than where they would have stood. So really, really big deal if the market just chops sideways, which at the moment we have relative volume trading under or below average, below 30-day average anyways. And so we have a recipe for a stock market that's asleep and waiting on the Fed. And we all know that. I hate that that's the case, but that's what we have. Now, seasonally, you ever heard that before? Seasonally, it's a bad time of the year as well. I shared a email with clients. I do this every week. I like to write the emails. And see if I can show it here. There you go. This is the email, but we're looking right here. So seasonally, meaning look month to month, let's look at the Dow's performance. This is not my data, by the way. This was Broad Street, or somebody came out with it, and I just took the data, right? I update it, but I just took it. Anyways, look at September. This is what we're going into. It is the worst month of the year. Now, you could see it this way, or you could see it this way, whatever you prefer. I'll go up a little bit so you can see. Over the last 100 years, the Dow averages a loss of 1.21%. It's only positive 40% of the time. So seasonally, it's a tough time of year to be a bull that's very excited, right? It's also, by the way, the it's the third quarter of the second year of the presidential cycle. I don't know if you know that data. I've shared whole classes on this with clients and everything, but that's the worst time of a presidential cycle. Right? It's almost always negative, like 87% of the time it's negative. So we've got that going against us. Well, you know, you have the midterms coming up too. I mean, woohoo, it's going to be exciting. Over the last 50 years, you're down about 1%, only positive 38% of the time. Over the last 20 years, which 10 of them have been magnificent, only positive 50% of the time. So again, you say, I know weakness is abound and likely to be in this upcoming September, right? So I want to be a shopper. I don't necessarily want to be a buyer. This, I would argue, back over here to the charts, I would easily argue that this is a buying opportunity. Now, when is up to you, and you might have individual stocks or ETFs and mutual funds, things you're looking at that you see prices falling, and you'll make that decision, you know, whenever it is you're trying to get in. But this ultimately proves to be a buying opportunity over the long run. Is it right now, though? Is that, given that you can trade at a moment's notice, is right now this moment the time to buy? I just don't think so there. So something to look at. And again, real quick, seasonally, we know this is the worst month of the year, but it's not a reason to say, pack it in, call it the end of the year, we're going to run away, this is the end of the game. No, we go into the holiday period, which is almost the best time of the year. It's the best 3-month stretch of the year, but it's good things around the corner. You got to get ready to kind of sit through some of the mess, and we'll have a Fed meeting and all that stuff in there as well. All right. So as far as the S&P goes today, there was a moment it looked like it was going to try to rally overnight. Actually, futures markets were higher. It looked sort of promising. And throughout the day, people just said, I don't have a reason to buy aggressively, right? So it is no longer, it's not the belief that the market is going to rally. You can see that people have said, I'm going to wait. And that's totally acceptable there. If you move on over to the NASDAQ, it's a lot of the same picture there. No issues there. The Russell did peek its head into positive territory here today, but is still very much in pullback mode. Nothing changes there. If we look at bonds real quick, there's a stat going around. When the 10-year hits 3%, just sell stocks, right? Just sell. And that's actually worked all year. In May, I believe May was the first time we hit 3%. It would have been right in here. Yeah, so about the beginning of May. First time we hit 3% on the 10-year. This is not the 10-year, by the way. So that's been going around. It's basically worked every single time. What happened today? 10-year hits 3%, right? So a lot of talk around that. I don't know. You got crude oil starting to try to change the trend a little bit. Remember, picking on a change of trend in crude oil is difficult, right? It is very difficult to do. But it looks that it's changing course there. The crude oil numbers come out here today. You got a lot of action going on around the country, or around the world, I should say. And so you got action over there in the oil space. Also, pretty much every oil stock was higher today. That was the hot spot today. What was the only one that was down? Can I even see? It was so tiny little loss. Cortera basically lost less than 1%. Other than that, energy stocks were through the roof today. The big names, right? Broad sector-based buying. This wasn't stock picking because of Occidental Petroleum and Warren Buffett. This was broad sector-based buying. So while he'll get the credit for it, that's fine. This was not the case of one stock just being all excited. So you can look around there. And if you have anything energy related, you're enjoying the gains here recently. It's back up to 87% gains year to date. So energy's really come a long way there. Going back to the S&P real quick. When everything pulls back like this, right, how do you find strength? We talked a little bit about this yesterday with the sector-based performance, so we could see how the average stock was performing. But when the market pulls back, your options are set up a scanner, right? Very popular these days, of course. Computers can do a lot of the work. You could just sit there and go through the S&P 500, the NASDAQ, whatever you want. But how do you find opportunity there? Now, I'm not allowed to suggest stocks, so I can't say, go buy this. We're an SEC registered financial advisor. We're registered with the federal government. And so we had to pluck that out of promises that, we won't do that. I can only do that to clients where I know their history, right? So anybody here I can, but publicly I'm not allowed to do that. I can get around it a little bit. So I was thinking last night, how do I bring your attention to something without saying this is the stock or these are the stocks? So I'm gonna try something. If the video gets taken down later, you'll find out that it was, of course, because we got in trouble for doing this here. But I want to get you as close as you can, or as close as I can. So here's what I did. Let me explain this one here. We're gonna need to be able to see it. Here's what we did. We took the entire S&P 500 and we said, all right, let's put them in buckets. I would like to find the best performers over the most recent rally. So there's 10 buckets. This from here to here. I want the best performers in this bucket. And then I want the next best performers in this bucket, and so on and so on. All the way down to, from that rally, from June till most recently here, the worst performers, meaning which ones from here to here in the market did the worst. They just barely rallied, or maybe some of them fell, things like that. So what you're looking at is best performers in a bucket. There's 10 buckets, so S&P 500, you could do the easy math there, and all the way down to the worst, right? Then what I said is, okay, of those stocks, we've got them in their little buckets now, take the performance from this pullback right here and show me what happened. Right? Oh, there we go. It's coming to life. Yeah, you got it back up. Okay, so we're back in business. So I said, okay, well, let's take an example. Of these guys here, they had the best move from June lows all the way to here. Now show me how they performed over this stretch to here. So the most recent pullback. So if we do that, we say, okay, we've got these stocks here, the best performers, the fastest, highest flyers. I'll give you a hint. It's most likely utilities and energy is a lot of names in here. And over the past 6 days now, they were one of the worst performers, meaning they pulled back the most. So stocks that had the best move going up have had the most aggressive pullback going down. Think tech, energy, and utilities, right? Some utilities. If we kind of just blur your eyes a little bit, look at the trend of what's happening here, it's very clear that those that had the best run are having the biggest pullback. Those that have been the weakest on this most recent run are pulling back the least, right? So the worst performers are showing that they don't really want to fall anymore. That's what you learn from this. You go, cool, find some of the weak stuff and realize that people are willing to still go buy that weak stuff. How awesome. Let's go now narrow our list down to what would be 50 stocks, not a big deal. Over here, we say these are the best performers. They're the obvious names. You know what you're looking at there. The obvious names, they've pulled back the most. Now, that allows you to say, well, now I don't have that many stocks to go through. I can find stocks that look like this or slightly worse and realize a faster discount, or meaning, the strongest stocks gave you the biggest discount right away. The weakest stocks are showing some kind of strength there. Rather impressive that the weakest bottom, 40th percentile area there has done the best in terms of this recent pullback. So that's a unique way. You can actually set up scans for this and stuff pretty much in any scanner. You break the market into a chunk and say, compare the performance now versus the performance over a time period. And all I really did was just plot it for you so that you could see what it looks like visually. All right. Hope that helps. All right. Let's do some stocks in the news. There's actually quite a bit going on here today. I'm going to start with Intel. So you can see Intel very, very close to hitting new lows there. They are going to be working with Brookfield. That's a REIT. They're going to be building a chip plant in Arizona. And don't hold me to this, but I believe it was $30 billion. Let me just go look. It's a $30 billion deal. Yeah. Woo. Okay. Where'd they get the money? Where are they getting this money to do that? Well, that's interesting. Was there just a chip bill that was passed and a whole lot of money handed out? Huh. Good for them. All right, you got Apple in the news here. They said basically after the iPhone 14, they're going to start manufacturing the iPhones in India. The stock didn't really move on that. It was a slight down day compared to the market. We kind of just call it a market-driven decline today. Dick's Sporting Goods, better than expected earnings there. They were pretty positive across the board. Everything across the board. Better earnings. Revenues were better than expected. I don't have anything bad to say about Dick's Sporting Goods. It's not normally a big mover on earnings, so that explains that. The Twitter thing between them and Elon Musk is heating up a little bit there. The former, I don't think he works there anymore, the security chief, basically is acting as a whistleblower there, says, yeah, we didn't lie, but we misled regulators about our security, the hacking attempts and hacking successes that they've seen over the years, and spam. Spam's the key word, right? That's the reason your stock is lower today. Spam is the key word. That's the big reason behind Elon Musk's current lawsuit against them, or dual lawsuit against them. And so you got weakness there in Twitter. Old Musk gets the edge. Netflix in the news here today. They're looking to compete with the online gaming companies. They're looking to do cloud-based gaming, which, they're already cloud-based video and movies and shows and stuff. They're looking to get into that as well. I think the concern there is, what is that going to cost, right? Oh, sorry. Let me go over here. Palo Alto, big move today, big breakout for Palo Alto. This was an earnings beat across the board. We have some clients that work for them, so I'm happy for them. And they're doing a 3-for-1 split, Palo Alto. I don't remember the date, but everything was good with them. Earnings beat, guidance up at the upper end of, they give a range of their estimates and guidance, much higher there. I don't know if you care about the actual numbers there. Sometimes I give them to you, sometimes I don't. But very good for Palo Alto. And good old Smuckers, man. Smuckers is killing it. Y'all are buying your jams and jellies, I guess. Up 3 1/3% on the day. A really good earnings report for them as well. Really good across the board. Earnings, revenue, guidance, everything. So no complaints there. It looks like it's headed back up to those prior highs. Elsewhere, what else do we have? JD.com. I don't know if you know what they do. Just think online sales. They had earnings as well. Pretty good. Not rock star. Not better than some of these others, but very good for them. So we got a little bit of a bounce today. 3.4%. Remember, Chinese stocks are more volatile, so 3.4% on something like that is just an average kind of a day. Zoom was in the news as well. That was yesterday with their earnings. They got to cut some costs, right? Basically, you look at Zoom. I will point out that the number of accounts that were greater than $100,000 in spend per year, that was up about 12%. But otherwise, they got to cut back. They got to cut back spending, advertising, all of that stuff, as the revenues are just declining a little bit, right? The whole COVID thing is over. And so that's how that goes. What else do we have? That's all I got. Tomorrow, Network Appliances is going to report. A lot of retailers. You have Guess reporting as well. Just a couple to point them out. And then Snowflake reports and Splunk. Splunk is a very poorly performing stock on earnings. It's only been up 2 of the last earnings reports there. Salesforce.com. I forgot to mention that as well. NVIDIA. So a couple names coming up. Those are all after hours, though, tomorrow, so maybe we'll catch them there. But not too bad. Hey, if you have questions, I'm happy to try to answer your questions before we go. But that's pretty much what I wanted to share here today with you. I like it. I like it. Energy stocks bullish. Yeah, well, I think you're more asking oil. Energy stocks themselves have held up really well relative to the decline in oil. Look across the board almost with all the bigger names there. But oil itself, right, the raw crude oil futures, I don't know. I'll never be one to try to guess the top or bottom there. I just guess I wouldn't be good at it. Yeah. What are we talking about there? You guys talking about something? I missed the conversation, Billy. But good for you guys. Talking about 3 times leveraged ETFs. You don't like the decay. Okay. That's part of the game there, though, right? There's not much you can do about that. That's part of the game. It's not always, by the way. If that's what you guys are talking about, um, remember the decay exists because of the roll in the futures contracts. So if there is no debit for a roll in the futures contracts that they're currently using, there's no decay. So I'm hard on them sometimes because there is that decay. A lot of people fall for that, but it's not always. Oh, there definitely is decay in that. Yeah, you're not going to see it if you're saying like, well, then how come I can see 3 times returns on a chart? Yeah, you don't see it on the chart because remember the decay comes from the price. It doesn't come from your pocket. So it's a whole different, ETFs in general, that's how they do it. Yeah, the speech at Jackson Hole event televised. I thought it was just a drinking event. I believe it is a drinking event, but it will be televised. And there'll be interviews. I believe Jerome Powell even does an interview with like, Bloomberg and CNBC and stuff. So they'll be on. Yeah, it was last time anyways. Well, why buy stocks closer to 52-week highs rather than more beaten down sectors? Oh, I'm not making an argument for either one. Some people like to find big pullbacks and they say, well, I'd rather have the weaker stock and if it eventually turns the corner, I got a potential for a bigger gain. And some people say, I play momentum. I want to see something that's already proven to me that it's strong and I'm willing to essentially buy high and hope to sell higher. It's all personality, really. There's no wrong way until you lose money. That's what I tell people. So it has to fit your eye. I'm like in the perfect position for my current employment, right? Because I have a poor eye for shorting stocks. I've never been good at it, right? I can buy counter trend discounted stocks for whatever reason I see that well, but I'm not good at shorting the tops of stocks. So I know that. I'm not going to mess with it. As soon as you figure that stuff out, that'll save you some money. I'm not good at Forex either. You notice how I never mention it. I despise it. My wallet and Forex do not agree. I understand that. I'm willing to move on. Do you think we'll retest recent lows? I don't think so. I think there'd have to be a huge change in sentiment. That's a tide that you don't change overnight. And right now you have everybody believing that things are working their way better, right? Across the board, geopolitically, virus related. So, yeah. So I don't think so. Yeah. You're talking to him. There you go. Need to learn to sell better. There's nothing worse than selling a stock and then the next day it's like, oh, Warren Buffett's interested. That does happen though. What do we think about there's a bunch of stocks actually with their big dividend payment. I was trying to think, there's a REIT. Yeah, I think there's a REIT in there somewhere. I did see this one on TikTok. Someone was saying that Thursday is the day, or you got to buy it before Thursday. I don't know. I haven't looked at it. I do know they are paying a large dividend. They have a history of paying a large dividend. So remember, the price will reset when they pay that dividend. Doesn't mean it's going lower, just the price will reset by the amount of the dividend. But they are known for paying a big dividend. They have for a long time. For example, what was it? Last quarter is only $2.85, $17 the time before that. See how price resets? You pay a dividend, the price of the stock adjusts by the amount of the dividend. A lot of people get trapped in that thinking, oh, this is going to be great. So that's part of the game. Doesn't mean you lose, right? Because you got the $17. Just know that that's the reason. $2.50 and so on. So good for them, or good for you if you own it, right? Better than owning it at highs, knowing there's a $20 dividend coming your way. Mm-hmm. I would love to go to Jackson Hole. I actually looked up the earlier this year. I thought, well, maybe we'll just go out there for the summer or something. And I looked it up, and the Jackson Hole airport was closed, the whole thing. So you look around at other airports, and they all know that. So the price was ridiculous. And I was, well, we'll do it another year. Yeah. Count Chili, first time watching. I appreciate it. Subscribe button would be great. What's the reason you chose this to do your job? Motivated you come from a family more? Yeah, actually, I've done a video on that. Basically, family. Yeah. At least that's how it started there. And then family kind of forced me to start the business because I didn't want to get in trouble. But Yeah, I've done. Maybe we'll go back and do that video again because it's probably lost in the shuffle. It's been a few years. Yeah, yeah. I fly to the discounted airports, man. Can't be Mister Get Your Dough Straight, and then you're out there like, hey, let's go to Jackson Hole, and I mean I don't even know what's out there, but let's go live it up every now and then, right? All right. Hey, you guys enjoy the rest of your day. I appreciate you hanging out with us here. I'll be back tomorrow. We'll do it all over again. It'll be Wednesday for you. In the meantime, if you haven't hit the subscribe button, that'd be great. If you have, of course, thank you. We are hopefully going to grow this sucker and get more people to recognize us. Love it. Enjoy the rest of your day. We'll see you tomorrow.